Market indexes as over the past week, Dow Jones seemed to move more decisively higher, yet Nasdaq remained relatively unchanged and the broader S&P 500 edged lower. In this report, we are to discuss the financial and fundamental environment surrounding US stock markets and the earnings reports released. We make a start with the Fed's monetary policy, given that currently it maintains a tight financial environment around US businesses. The market seems to solidify its view that the bank has reached its terminal rate, yet the high interest environment seems to be maintained for a prolonged period. Yet we have to note that the stronger than expected retail sales rate for September tends to highlight a robust demand side for the US economy, while the US labor market seems to remain rather tight. Both of the pre-mentioned may continue feeding inflationary pressures in the US economy, or at least not allow inflation to come down at a faster pace, and thus may harden the Fed's hawkish stance. We highlight Fed Chairman Powell's speech tomorrow at New York's Economic Club as of particular interest that could affect the markets. Should the Fed Chairman maintain a hawkish tone, we may see the market sentiment turning more cautious, a scenario that may have an adverse effect on US stock markets. Across the Pacific, Chinese data took the markets by surprise as the GDP rate for Q3, industrial production and retail sales growth rates for September did not slow down as far as expected. Yet we note that embattled property developer Country Garden is at risk of defaulting on its entire offshore debt following the company missing its payment deadline on Tuesday. The failure to repay its $15 million coupon following a 30-day grace period appears to be reflecting China's deteriorating property sector following the collapse of Evergrande. The issue highlights the headwinds placed by the construction sector to the recovery of the Chinese economy, and the loss of confidence in its outlook could weigh on the market sentiment and thus on US stock markets as well. US equities markets yesterday tended to edge a bit lower, and we know that Lockheed Martin posted better than expected earnings, as the geopolitical tensions appear to be filling the company's orders book. It should be noted that the Israeli conflict tended to support the arms manufacturer. At this point, we would like to insert a word of caution, as despite the Israeli conflict not affecting US stock markets at the beginning, it may have an adverse effect should the situation escalate further and possibly be internationalized. Goldman Sachs, on the other hand, saw its profits plunge predominantly due to its write-off of its Green Sky fintech business and the company's investments in real estate, according to Reuters. Yet last Friday, we have to note that other US banks, such as JP Morgan, Wells Fargo, and Citigroup, released better than expected figures both on an earnings level as well as on a revenue level, implying that the US banking sector remains resilient. We expect today the market's attention to turn towards the releases of Morgan Stanley, Travelers, Procter & Gamble, Tesla, Netflix, and Alcoa Corporation. Until our next report, we note the release of the earnings reports of AT&T on Thursday, American Express on Friday, 3M, Google, General Electric, General Motors, Coca-Cola, Visa, Microsoft on Tuesday, and Boeing, eBay, IBM, Apple, and Meta on Wednesday, the 25th of October. Hence, we may see market attention shifting towards the US tech sector as in the next week, given the wide number of high-profile companies of the US tech sector that are due to release their earnings reports.